Hi, Warriors. How's everyone doing? Hello, Forex Gal. Fed meeting starts today. Hello, Brock, Shahab, all you Mavericks out there. Everyone doing okay? So let's have a good week. Just want to go over a couple of things. We talked about the short and the crude on this candle a little bit early. We have a failing pop here, and crude's about to re-enter the rectangle. So here's your rectangle. This range from here to here. Okay, and weekly after a great week, kind of looks like how the S&Ps are acting today, the last couple of days. Not much follow through. For a 2-week reversal, you need 55.22. And, sometimes these things, uh, wow, the off number's all the way down here. Be nice to see that off number being tagged. Let me look one more time. Oh yeah, it's all the way down there. It's this candle. So it's really going to take a lot to get a 2-week reversal. We'll see if that happens. Really starting to struggle here, used up a lot of energy. Friday was kind of a hurrah day and everything. Even the S&Ps are correcting after that big day on Friday. So actually, back in the black on shorts I took on this candle Friday after NFP, although early. Now, even though under my worst sale, I have about 7 handles. So I'm going to stay with this. As you can see, I, I took half off the table, but again, just like the crude on the weekly, no follow through. On the indexes, which is a little different than crude, and maybe you could write down this number, and if there's a rally after the Fed, see how it acts against the 2-week off number is 3143.80. So that's going to be like a 20 handle pop here. That could be possible into the Fed, get one more failing rally. I know a lot of people are looking for new highs. It certainly looked like a layup Friday, didn't it? I mean, here we were. So maybe that was 88.6 up there. Could still do it, but I would say right now, anyone who bought Friday's close looking for new highs like a layup, they're regretting it. So if this is a hanging man, and Steve, I believe Steve, he says there's really not a thick enough body on it. I don't know, maybe the hanging man before he went to the gallows was on a diet, and all you have is a very thin pin bar. He was on a fast. And if we take out last week's lows, we talked about it yesterday, the market's it's got problems. So the two blue lines, the megaphone throwover line comes in up there around last week's lows. Then you have, if that gets taken out, then you're going to have some kind of uptrend, and everyone looking to buy this market at 30.30 if it gets there. So we'll see. As far as turnaround Tuesday trade, I'm bearish long term, the end right here. I think we're going to get a breakdown under last week's lows, but I still think the dollar might have one more pop left in it. And if that's the case, we could see 109.07, 109.10, some type of fib retracement, ABC up here. I'm a seller up here, but there could be a scalp. You have some tight stops under, Ritz 20 pips. See if we get a reversal on Tuesday. Just an idea. And, I kind of feel the same way about the dollar, bearish about the dollar, but I think we could have something like this from here, maybe back to 98 or so for a sale, unless we're just going to puke from here. But potential of another leg up. In fact, I think one of the currencies that had the best response Friday when the dollar was rallying was, I haven't been paying attention to it. I know someone that is. Let's see how CAD looks. I don't know why it's not coming up. One more time. I'll use a different one. Okay, it's up 10 here. So this was a much better response. See this? Where the yen almost gave it all back on Friday. To me, it looks like we're just consolidating this huge move, and I was talking about it. We're really kind of on the cusp of some type of breakout on the weekly. I think we're right there. So, as far as dollar pairs between USD CAD, USD Yen, USD Swiss, this is your strength, okay? So this is the one if you want to be long the dollar. So you look at this compared to US dollar yen, much weaker, right? And US dollar Swiss, much weaker, right? So if you want to play the long side dollar, I think, well, I guess you could short euro or cable. Even cable up here, guys, starting to show some negative divergences here, still over 70, but God, I don't know if I would stay long into the election or have anything on into the election, which is what, Wednesday or Thursday? Wednesday night here in the States. Are you going to be flat, Blake, for the election and just look to react to it as results come in?
Yeah, I am.
What time's that going to be, partner?
Well, probably like 5 p.m. Eastern. We should get some.
Today?
No, Thursday. We should get some
Thursday, okay.
exit polls. So you'll have
All right.
people walking out of the booths and being comments from reporters. It's going to be a long night for those of us that are trading on Thursday.
Will
So
the bar be open during that session?
I might have a martini or two. So yeah,
Okay, buddy.
yeah.
So, well, what are you thinking in here? I know not a lot of movement since yesterday either, but
Well,
any
actually, so Wilbur Ross
Aussie
was just
yen?
yeah, he was just on Fox News, and he was talking about the China U.S. trade deal. Phase one is going to leave all the hard stuff for phase two. So what that just told the market is that we're going to get a skinny deal. If it's
Yeah.
a deal, it's a skinny deal. So the market is a little wobbly on that,
Yeah.
and so the market's like, shoot, so this phase one is really going to be not too big of a deal. But more importantly, what the market's really going to be focusing on over the weekend is rolling back some of these tariffs, the September
Right.
15th and
Yeah.
the December 15th tariffs. And if for some reason those don't get rolled back, we're probably going to see some pretty severe risk off going into year end. That would be my assumption. Also, there's if you missed Lighthizer and Kushner, Ivanka's husband, who they call the closer, they flew to Mexico today or yesterday to wrap up the USMCA deal, and everybody's kind of like, wait a second, weren't you guys just in China? So if they are leaving China to go to Mexico to wrap up NAFTA or USMCA, then that kind of leaves us with the idea of, so nothing's going to get done in China, right?
Yeah.
I mean, if our top negotiators are leaving China to go to Mexico, what's that tell us about what's happening in China? Probably
They're
not a
hoping
lot.
that the market won't think about it if we get the other deal
Well, yeah,
as
and
much, you know.
yeah, that right. That's a bird in the hand is better than two in the bush,
Right,
right?
ameliorate the situation a bit.
Right. And so, but as you know, and as the market knows, the USMCA deal is not a big deal. I mean, everybody's trying to rah 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 around it, but in all actuality, it's basically a rewrite of NAFTA, and it's not really. There's not much material change there. So, um, if the Trump administration is going to hang their hat on the just USMCA, or they're trying to just take the like easy win right now, the market's sniffing that out right now, and that's why you have markets that are a little lower this morning.
Mhm.
You have some stronger yen, weaker Aussie, and that's that could weigh on sentiment going into year end. So it's interesting. You know
Yeah, classic risk off looks like it's rolling over here on Aussie yen, Blake.
Yeah, it's trying. I've got it on my screen here, and you can
Go
see
ahead,
that.
buddy.
Yeah, you can see that we're breaking this trend line, and
Okay,
um,
better look.
yeah, it's breaking this uptrend line. And one thing that we've got to remember going into last year, this is if this is Aussie yen, this is November of you can see it right here, November of last year, right? Well, let me grab the it's
Because
November,
last December
December.
we got crushed in the market.
Absolutely
Yeah,
smashed, right?
yeah.
Absolutely smashed. Am I saying that there's going to be a repeat of that? No, but you
Maybe
know,
an echo, not the same degree.
yeah. I mean, could there be some sort of move that resembles something like that? An echo is a good way to look at it. Um, it's possible, especially if some tariffs don't get rolled back. If we we wake up Sunday morning and those December 15th tariffs go into effect, I mean, the market's not going to take kindly to that on Monday, that's for sure. And nor will the Aussie yen. The Aussie yen will be, really under pressure. But what I think is if those tariffs get rolled back and you get a little bounce in the Aussie yen, you might be able to sell into some strength, knowing that this deal is not going to be uh, it's not going to be it's not going to be a full deal. It's going to be a light deal. And remember, the markets have been rallying nonstop in equities. I mean, we've been rallying nonstop based on this quote unquote China deal to get done. So, a light deal, a skinny deal, tariffs partially being rolled back. I mean, that's all going to weigh on equities going into year end. Are we going to see another repeat of November, December? This right here, probably not. Like I said, I doubt that this is going to be the case. But um, we are definitely running a little bit of a risk here. So today, what's in focus right now is going to be the USMCA NAFTA deal, and that's why I'm paying really close attention to the U.S. dollar Mexican peso. I actually blogged about it yesterday. If you guys saw the chart of the day, the US dollar Mexican peso is approaching some really key support. Once the NAFTA deal is announced, I want to see how the US dollar Mexican peso responds. I am looking for a little you know dip here. If we can dip down to 1915 level, which is the 78% retracement right here, I would be looking to be a buyer. I mean, uh, wow, look at it's so funny. Equities, soon as New York steps into the fray, this is what happens in equities. Whoop, it's like this thing nonstop equity market buying coming into North American trade. It's amazing every single day. But anyway, I like I said, I think we got to pay real close attention to what's happening with NAFTA and or USMCA, and seeing what happens with the US dollar Mexican peso down here. I think it's going to be a very tricky uh, tricky environment. I'm going to look to buy a little bit of a dip if we can break through these lows today. I just don't know if we're going to get it. I might be you know uh, maybe asking for too much at this stage in the game. I'm thinking that we might get a dip, but I don't know. It doesn't. It's not. At this point, it's not even really feeling like it at this stage in the game. Um, so we'll see. But yeah, the euro is a little stronger this morning. The reason why it's stronger is we had the ZEW numbers come out much stronger than expected. Now, just keep in mind that the euro is moving up towards this big downsloping trend line. This gave us a very big uh, resistance following the jobs report, super strong jobs report. The euro got slammed down, and any move back up towards 111 is going to find some, I would think, some pretty key resistance. Do I want to be long the euro? Not yet, but I'll tell you, as you guys know, I'm so focused on these areas here, the 200-day moving average, the horizontal resistance that comes in around 111 and change. So I think a break above 111.20, this we start to get in the, I'd call it like the danger zone, if you will, where the euro stops so many times. It's like what's gonna allow the euro to really loosen up here. I'm not really too sure. So um, uh, uh, it's something that as we see the euro bounce, you just have to be really careful about being too aggressively long any type of euros going into this resistance. Now, one of the things that we'll talk about a little bit, uh, just going into today or going into Thursday, is the UK elections, and I know I mentioned a little bit how it's going to be. Um, it's going to be a long night, and I don't have any pound exposure. The cable, I have to admit, is holding up very well. Most people that I talk to, and I've read analysis from, really don't think that this is going to be much of a contest for Boris Johnson. But like, if you listen to Amanda in our chat room, she says there's a lot of you know the registered voters, the young voters, are looking like a record turnout, and they all want to stay in the EU. Whether they'll be, it's whether they're going to be, it's going to be big enough for them to you know um, force a hung parliament, or I don't know if enough people are going to want to vote for Corbyn. But there are risks associated with the cable right now at these levels. And technically, you guys can see it, it's really big. I mean, we have the 161% extension of the flag, and I'll put that level right back in here. I'm just kind of trying to give you guys a understanding of what I'm seeing. There's 161% extension there. Longer term, 50% retracement, from this move, from the high to the low, 50% retracement. So we've been knocking our head up against there all week long, like all week long. There's also a massive downtrend line, which is a multi-year trend line that comes into play right at that same level. And that's basically 131.70, where we're at right now. I can't garner the strength right now to to buy the pound dollar as it sits right here. I'm gonna have to wait till Thursday, and following the election, I'll be up pretty late that night, trading this. However, a move above 132 is going to be pretty bullish on a sustained basis. So, we might spike up to, 133 and change, and then settle down at 132 and change. And at that point in time, I'll probably be looking to buy, the cable, or, buy some sterling. But a rejection here would be big. And that's something that, I don't know if I would want to trade the pound dollar short, but I might be trading, euro sterling or the euro pound. I might be playing that on the long side. One of the things that I want to bring to your attention regarding the euro pound is that we are at a long term, and I say long term, so I'm gonna have to zoom out the charts really quick, let them populate. We're at a long term 38% retracement. So if you look at this daily chart, let it, you know, get all the information here. Slowly but surely, we are getting all the information here. Okay.
That idea,
Uh,
Blake.
you can see the 38% retracement is right here at this 84 pence level. So, would I be willing to play the euro pound to the long side? Yeah, I would if there's a pound failure. So that's just something that I'm looking at. I'm sorry, what did you say, Dale?
I like that idea.
Yeah, I mean, again, I'm not.
Not. I mean, for a trade,
Yeah, I just don't know if I want
it's
to.
long anymore.
I don't want to. I don't know if I want to play. I don't want the dollar in my equation, is what I'm trying to say here.
Yeah,
So,
yeah,
yeah,
yeah.
um,
And when you look at that long-term chart that you're showing, as bearish as the daily looks, the weekly, it just looks like sideways movement off a huge uptrend. Look at the move before we went sideways for a few years. That
yeah,
was a big move on the weekly.
yeah, and so we're at a lot of supports, and that's the flip side to how you look at it on a daily basis, and you're like, man, that is bearish. Look at that bearish breakdown. But really, longer term, it's not, and
Yeah,
that's
really,
why.
just show the monthly for a minute,
It's also
and people will really be able to see what you're talking about.
it's also typical market behavior. They first took out the shorts by
Yeah.
by incrementally posting a new high.
Yeah.
Now they might take out the longs by incrementally posting a new low, and then it might continue higher.
But look, that whole range, Steve and Blake, look at it. It's off a huge move to the upside from 70. And actually, if you were looking at this chart, you would probably be saying, you know what? I need to look for a spot to buy it.
Yeah, I agree, guys. And so again, I'm not getting in right now. I'm not entering, but it is something that I'm strongly considering if the pound does fail up at these levels come Thursday, Friday. I might be looking to play the euro pound to the long side. I know I've told you guys a lot as of late, as of the last few months. I'm actually quite bullish the euro. I think that the euro is building a great base, and I think that the euro dollar is really setting the stage for a big rally going in the next year. But how am I going to express that? Is it going to be through the euro dollar, or is it going to be through the euro pound? I mean, I'm not. I am long a little euros, but I'm long euro Canadian. Uh, so it's not, it's kind of a cross, and it's not even it's not a big position at all. But I think that the euro dollar is building a base, and I think we're eventually going to be breaking out. And again, how I'm going to express that will be determined by the market in the coming months. And am I gonna express that through euro dollars or euro sterling? I'm not really 100% sure at this point, but I do think that if the pound does fail, if the pound fails up here at the 132 level, the euro sterling is going to squeeze, and we could see the move at least take us back up to 85.50, if not back up towards the 200-day moving average near 88 pence. And remember, this thing has been just gotten demolished over the course of the last few months. I mean, you look from August, we were trading at 93. We're at 84. Almost 1,000 pip move in the euro sterling is a big freaking move. So could we see a recovery? Yeah, and that's what I'm thinking here. So anyway, those are just a few of my thoughts this morning. Steve, I heard your voice. How you doing? How you doing today?
Hey, I'm here too. Good morning.
What? Who? Stelios, it sounds like the antibiotics hit you pretty well.
Yeah, baby. Yeah, and the other drugs as well.
You gotta love Western medicine. I mean, I'm all about trying to apply a holistic approach to getting better. But I tweeted a picture of the mother of holistic medicine, and she is my grandmother-in-law. Put it that way. She's my grandmother-in-law, and she's an amazing woman. She's 99 years old. We just celebrated her birthday. She's she practices holistic medicine, but also combines it with Western medicine. And I think that's like the best approach, because when the holistic approach doesn't work, throw some antibiotics on it, and you got yourself you're gonna feel better. So hopefully those antibiotics have kicked in for you still.
They have indeed, and I do feel
Well,
very good. Thank you.
Blake, you're a Marine. Sometimes you need a bazooka.
Yeah, that's
You know what I mean?
exactly. Oh, totally. I totally agree with that.
Yeah.
But I'm a big proponent of a lot of vitamin C all the time. So,
Linus Pauling.
yeah, well, yeah, Polly, got bit by a spider, a big spider. All you have to do is rub castor oil on it, and you're going to be fine. That's how you cure things. Castor oil. Anyway, well, guys, Stelios, I'm glad you're feeling better. Steve, I'm glad you're here. Coach, I'm glad you're always here. I'm going to pass it over to you, because right now, let's just hope that we get some explosive moves regarding USMCA.
Thanks, Blake.
Yes, indeed.
Good luck today.
Thanks, Blake.
Yeah. Thanks, guys. Have a great one. And Stelios, I'm sure everybody's going to want to hear your Brexit synopsis. So
Thank you.
All right,
Thank you,
guys.
Blake.
Have a great one.
You too, mate. Bye-bye.
So let's see what game of chess Trump is playing. He obviously has a couple of fronts where he can produce a good result that's going to help him, right? So he was playing China. Actually, speaking about China, finally, I saw a tweet a few minutes ago on my stream. It was from the 7th of December 2018, and it was Trump saying, China negotiations or China trade deal is going well.
Yes,
So
yes.
a
of
year
course,
ago. It's insane.
Yeah.
But,
And the market keeps buying this, which tells you all you need to know. I mean, the market is bullish and it remains bullish, and it's going to keep buying whatever BS they throw at it, right? Because when a market is bullish, the market reacts positively to any crap you throw at it, literally, and more or less ignores anything that it wants to ignore. Initially, we would have like one big comprehensive solve it all deal before the elections. Then when that was obvious that it wouldn't be possible, we started breaking down the deal in parts. Then we started talking down the importance and the extent of phase one, which in essence, now phase one, if we get that, has been stripped mostly to something like phase one is to agree to continue so we can get something that will be substantial in the future. And now that this seems like it might fail as well, we got to the last stage, which is like, okay, who cares about the China deal? Let's go ahead and revamp NAFTA to just rename it basically, and make a couple of changes and call it a day.
Yeah, it's like you said, it's amazing how the market just keeps buying it every time there's a headline. But anyway, let's see what happens with that. Regarding the UK elections, I think Blake is right in what he's saying. And one thing I personally do not understand, and I want somebody to tell me why this is happening. If Labour, who by the way do have a big majority in the 18 to 25-year-olds, if Labour had a young candidate like Miliband or somebody like that, and not somebody like Corbyn, who is totally unelectable in my opinion, and in many people's opinion, I think they would be ahead at the moment, or at least they'll be really fighting it neck and neck. And I don't understand why they kept with Jeremy Corbyn trying to fight it out with this guy who is clearly not attracting enough people away from the Conservatives, who, let's face it, they've Theresa May all these years, and Boris Johnson. I mean, Johnson is a little bit crazy. Okay, maybe he can get some things done, but Theresa May for all these years, did absolutely nothing. And this is, for me, potentially the best scenario Labour could have for an opponent in an election, and they're 10 points behind. Ridiculous, in my opinion. So, what do we think is going to happen day after tomorrow? I think the polls are never right, but I think on this occasion the gap is just too big to close, and I think there probably will be a majority, a Conservative majority. I don't think there's any way Labour could win. Best case scenario for them is a hung parliament at the moment. but I think probably by a small margin, but I think there will be a conservative majority. And what happens after that? What does a pound do if Johnson gets a majority? I think initial move is for the pound to strengthen, because this is what's being slowly priced, but it's not fully priced. There's always a risk of it not happening. So pound probably rallies, but then the big question comes: what is Johnson going to do with Brexit? Does he take this deal of his to Parliament? Does it pass? How can such a deal be actually implemented? It's not an easy thing, right? It takes a long time. It's going to be a transitionary period of years or something like that. So there's going to be obstacles to the UK economy. I think net, if there is, if Johnson does get the majority and does push through his deal, I think net is probably going to be a good thing for the UK economy in the long run.
Same here. I believe that whatever kind of a solution they give, in the long term, it's going to be much more beneficial getting something underway
Yes.
and getting uncertainty out of the way. And yes, there's going to be bumps on the road. There's no question about it. But the market had already priced that in. I mean, the market had already priced in that. I don't think that the market was ever pricing in a better case scenario than a bumpy Brexit at best. I mean, we were at a point a few months ago that the market was bracing and pricing in a very disorderly Brexit.
Yeah.
So, a Brexit that's going to be with some rules is still going to be a better outcome than, that potential outcome which it was like, a high probability scenario until we got this rally.
Yeah. And as you say, you start with a base scenario, what's happening with, XYZ, and then you start and you amend and you tackle one item after the other. I've read a while ago that the UK government said after Brexit, non-UK nationals will be able to come and study at the UK universities in the same way as before. There's not going to be a huge hike in fees. At least that's what I read. I don't know if it's something has been changed, but I remember when
it doesn't surprise me because it's in their best interest. I mean, of both sides, right?
Of course.
Yeah.
I studied in London. I know exactly how it is, and all these students coming in from other countries and living in this country and spending money.
There. Yeah, they rent homes. They buy groceries. They pay tuitions, and many of them, at least the capable ones, get absorbed afterwards by local companies, and they prosper and they contribute to taxes. And you and I have many examples of friends of ours that have.
By the way,
that.
Dominic says Aussie yen. Maybe let's have a look at the yen pairs afterwards.
Aussie yen was actually my first priority to look at, because it's indeed breaking down at the moment. So, Dominic, I would prioritize it anyhow.
Stocks are rallying basically. Yeah.
And wow. I know exactly why you want to have a look at it. Yes, stocks indeed are rallying. Did we have another stupid rumor or whatever?
I was speaking we had numbers. Sorry, I missed the numbers completely. No, they weren't very good actually.
No, numbers didn't actually use productivity revised. Okay, it was
delay of tariffs. Okay, delay of tariffs was confirmed apparently.
There we go.
Okay, thank you, Joe. See, when I was talking, I didn't keep my eye on the data and the feed. So there we go. Delay of tariffs. So the 15th of December tariffs.
Negotiators planning for delay of December tariffs.
Okay, great. Thank you. So so that's my view on the UK. I'm still optimistic on the UK end, on the sterling in the long run. In the short term, from here, it could be bumpy. My one and only scenario when I get really bearish the pound is if Labour get elected.
I also don't think there's a chance for that to happen, to be honest.
Yeah. I don't think it's going to happen, but you never know, obviously.
Yeah.
What else to say before you start? Okay, we had some data today. Norway CPI in line 1.6% year on year, as expected, and some numbers out of the UK.
Regardless, USD NOK has had actually an up day so far. as you
Yes,
see.
there was
So
there's a regional network survey where companies talk about how their the view on the coming 6 months and all that, and it was quite it was not very good, not very optimistic. So that was probably one of the reasons why it jumped. And also something people in the chat room were talking about yesterday when I was still a little bit sick, but I did catch it, and quite rightly. That the Bank of Norges Bank actually takes off the gas during December, usually, especially late December, from buying
which
kroner.
actually shows the difference between quality of education between Nordic countries and many of the other developed countries, US among them. Norwegians, which have $1 trillion on the side, right, in the sovereign fund. So
Yes.
dividing by the small population, like it's a small fortune for everybody, are pessimistic about the economy going forward. But for example, U.S. consumer are, spectacularly happy about.
Yeah. But
Yeah.
yeah. So that was, I was very lucky to catch that yesterday. I knew that, but I completely forgot. And people were talking about it in the chat room. So I closed my pattern, my short USD NOK, and my actual position as well. Yesterday at 913.4 or whatever it was.
To be honest,
I'm
this
happy that
is
happened.
getting dangerous close of just breaking out, because we have kept prolonging forming a right shoulder, and symmetry is already probably gone. So as long as we stay above like this potential neckline at 907, and the longer it takes for us to break down, the higher the probability is that we're just not going to break down, and we're just going to continue higher from here, and that this was a horizontal consolidation. So I do agree. Also, if you have a look at the USD SEC, produced a nice, for the time being at least, false break lower from this neckline, and it's back at the 200 daily moving average. So let's see what this is going to do as well. Now, Dominic mentioned Aussie yen, and Aussie yen is definitely one of the pairs I'm looking closer at. And the reason is this, because I've been monitoring this formation for quite some time now, this potential ascending wedge. We had been toying around with support and riding on top of this trend line support for more than a couple of weeks, actually. Yesterday we closed below it. I want to see how today we're going to close as well. But it looks like we might get a breakdown from here. Of course, that will definitely be helped if indeed risk sours. Pre-market, it was looking like it. Now we got again the rumor windmill, this time about postponing tariffs, which the market interprets as something positive. Although I'm pretty sure that even if they end up postponing tariffs, they're going to exchange postponing tariffs for more or less nothing, just to make the market think that things are moving forward in one direction or the other. But it doesn't really matter, because this is what the market we have. This is a market you need to trade, and the next upside resistance is almost at 3,200, and as long as we remain above 3,020, there's not really anything bearish to talk about here. We do see some clear potential for divergence. I mean, we are very close to all-time highs, but the RSI is diverging significantly, which means that even when we push to new highs, if that's the case, we will still have an RSI divergence in hand, which shows that definitely momentum has somewhat stalled. But that doesn't mean that it has to manifest immediately. I mean, there are occasions in which you see RSI divergence having to play out for quite some time before you actually do get a bigger pullback. Now, since we mentioned the Aussie yen and the potential of it breaking down, it's also worth mentioning the Kiwi yen, because the Kiwi yen has also been riding this channel's resistance and the 200 daily moving average. So this is also at an important area. So a breakdown from the Aussie yen from that ascending wedge that we saw is probably going to also mean another rejection from this confluence of the channel and the 200 daily moving average to at least pull back towards the previous breakout area at 70. So I wouldn't be, I would definitely not be buying Kiwi yen up here, but you can consider buying Kiwi yen if we see a dip down to 70. It was a resistance, so it is very likely that it might act as support if retested. Now, nothing has really changed having to do with Aussie against the US dollar. I mean, it remains trapped within this channel, and more specifically, even within the channel, you can see that we have this horizontal zone and the channel's resistance. So, nothing to do until something happens here. And having to do with the Kiwi, it seems to be responding negatively to the 61.8, not a big surprise there. But so far it remains decently bid. It can, of course, move lower before completing the inverted head and shoulders formation target, which remains higher at 66, 65. So there is a decent probability to first move lower and then actually make it up there to complete the formation. Now, having to do with Aussie against the Kiwi, this is also at quite an interesting juncture because we have this channel, and we're now in essence probing the area below the channel, and we've already seen quite a big move to the downside. So it's going to be interesting. I mean, very oversold in the short term. There's no question about it. I mean, the RSI, the daily RSI, has dipped to 20. Roughly. So I'm not advocating that somebody should be trying to actually sell it down here. It's very likely that we're going to see some type of rebound, but I do think that probably we should be looking to sell any rebound towards 105, 105, 40, decent area to do so. Now, AJ, JPY, just big jump, and we're back to buying risk. Yep. Indeed. So as you see, USD yen, since you talked about yen pairs in general, USD yen remains in this limbo. I mean, it's one of these
looks like Wile E. Coyote on the ledge of the canyon.
It's like these monstrosities that the market keeps producing lately. I mean, we've been trapped between this neckline of a potential inverted head and shoulders formation and this horizontal support area, and we've been really doing nothing in there. I mean, we've spent the
last... It
had
the weakest response to the blowout number.
Yeah,
really.
Yeah.
I mean, remember we were talking about people going, "Oh, look, the yen is exploding," and it was up about 20.
Yeah,
and by the end of the day, it gave it all back. It's really had the a very
it's like
anemic response to it.
Yeah, it feels like it's it's pegged. I mean, it feels like it feels like they've pinned it down somehow. You know what I mean? Because on occasion it has stopped responding frequently to what risk does. It has stopped responding frequently to what yields do. So I don't know. This type of behavior smells manipulation. I mean, it has become. It used to be so responsive to both those factors, and it has now become the exact opposite of that. So personally, I've said that a long time ago, and I've proved to be right on that. I'm not looking to. I'm not looking. Why even bother to trade this abomination? Because
you say that about the euro too. You were saying that.
Yeah, and it remains my opinion as long as the euro trades below 111.80, because I'll keep.
So actually, you get to save time screening.
Yeah,
because you don't even need to screen those.
But keep in mind, if euro breaks above 111.80, I believe
Yeah.
that things are going to change in this market.
Okay.
I believe that
I'm writing
the
it
market,
down.
yeah, write it down. 111.80.
Everyone write it down.
If we
Steve
close,
says, quote,
if we close the daily above 111.80,
Yeah.
I think we're going to get a squeeze coming.
okay.
Same thing can be said, on the other hand, that we should see an extension. We've now potentially formed the double bottom at the 61.8, which is at 1099, right? So same can be said if we take out 1099, then we can see some type of an extension lower to retest that previous low. But I do think that the most the better potential here is if we get a break above 111.80, I do think that's going to be worth trading. At the same time, I know you've kept monitoring it. At the same time, look
ugly.
at the USD Swiss test again and again and again this 98.40, 98.50 cent area. It is more than clear that it is a strong support area. But if this is taken out, I do think that the USD Swiss, is going to succumb to further bearish pressures. So that's going to be the deal here as well. What about oil? Now, having to do with oil, since you mentioned it, crude remains. Let's first have a look at crude in the 4-hour chart. So crude, look at this here. We've had this channel, right? We are within this triangle. We are within this channel, and it's more than clear that this market lacks momentum. So I still favor the downside in crude. I think that from a risk reward perspective, against this channel and especially against this triangle trend line, which is currently passes from like 60.5, there is a very decent risk reward to be short crude. So I wouldn't be buying it here. Let me say it that way. And I do think that if we get rejected here and start moving to the downside and gain some momentum, I do think that we're going to find ourselves down to 51, 51.5 in a much faster time than it took to actually recover from these levels up to almost 60, right? So this price action is giving me all the signals of a corrective recovery and nothing more than that. Now we have a question about the pound CAD. I did mention the pound CAD the other day, and I did mention it for a good reason, because it has also been riding this channel here, so it's attempting to overthrow it once again. But in all honesty, I wouldn't be buying it here. I mean, you want to buy it, perhaps you want to consider something like this. If you really want to buy it, that is an area I would think of as a potential decent area to buy it, but not up here. We've made several attempts to close above this channel. We haven't really done that. Who knows? It's early today again. As you know, I'm still I'm still constructive having to do with the pound, but it has already moved decently higher, and there is no risk reward for you to buy it up here. Okay. Now, let me see what other questions. Nat gas. Okay, natural gas. So here is natural gas attempting to break below this trend line, and that's going to be a very, very bearish development, right? Because this is going to, in essence, mean that this was a perfect corrective move higher, right? First leg higher equals second leg higher, in which case we might be pushing to new lows, and that would bode well with crude turning lower as well. So be careful here, because natural gas is really in the precipice of a breakdown. So that's what I think about it. Now, especially if we post a lower low, which means, you know, lower than like 218, I think that that more or less seals the deal. Gold, yep. Let's have a look at gold and silver. Gold and silver were higher earlier and they remain a little bit higher, but nothing has really changed here, meaning, in my opinion, they're both trading, especially gold is more than obvious that it is trading within a corrective formation. The problem with corrections is that you can never be sure when they finished in advance. So is it done? Might not be. We might need to see another move lower towards 1433. But I'm very, very confident that there is more upside coming from gold. Now, obviously, you have, you know, several ways to play that out. One way, if you want to be, you know, if you want to feel safer, so if you want to sacrifice a little bit of the potential gain to increase the likelihood that you're in the right side of the market, is wait for a breakout from this confluence of this trend line and this horizontal resistance area at 1485. So the safest way to play it, in my opinion, is buy a close above 1485. If that happens, I think we're headed $100 higher, actually. I think that next stop is going to be at the long-term 61.8 at 1586. So there's going to be a decent upside to be made following that. Now, the more aggressive way to play it is that you might buy, like, you know, a small position here, like a third or whatever. If we happen to go lower, you buy another third lower towards this triangle support. Or alternatively, if we keep moving higher from here, you can then buy more above 1485, but you can start establishing a position here. It all has to do with your risk tolerance, your trading style. So I'm not going to give you advice how to trade, because each one of us has a method. And if you're an amateur, I know that the main problem that you have is that you haven't yet established a method that consistently performs for you. And by consistently, I mean consistently over time. Statistically speaking, even the best trader can have 3 or 4 or 5 consecutive losing trades. But if you know that you have a method that over time produces positive results, you should just keep on doing what you're doing. Now, statistically, you will frequently or less frequently have consecutive losses or consecutive gains, neither of which should affect your psychology or your methodology. So, you know, it's a fallacy to become overconfident just because you happen to have like 3-4 consecutive trading gains in a row. And it's also a fallacy to try to change a method that you know has been working for years for you just because you happen to have 3-4 consecutive trading losses in a row. You should just stick to your plan, stick to basic risk management, because that's mostly what we do. And the only thing, in my opinion, that you should be adapting is based on the market conditions. So don't adapt based on results if you've already tested your method to be working. Just adapt based on trading conditions. So don't try to trade the market the same way you would do if it is volatile than you would do if everything is in a range and chopping around, right? Because obviously that's something that you need to handle in a totally different way. If I can have a look at Bitcoin, sure, we can have a look at Bitcoin. Now, the bullish case scenario for Bitcoin is that this move lower doesn't look really impulsive, right? So I wouldn't be surprised if eventually we break out from here and move higher. So I would have to say that, strictly sticking on the chart, as long as we hold this formation, which there is a chance that we might stay within this formation for much longer, right? I mean, initially we were here, so I assumed that this might have been a triangle, then this proved to be a different type of information, and this formation can keep, lasting longer. But I have to say that from, the chart's perspective purely, not even taking into account what I'm looking at here, just looking at a chart of something, I would have to say that I don't expect us to take out the previous lows before we have another move to the upside. So that's my take on Bitcoin. So I would pay very close attention to this trend line resistance currently passing from, let's say, a little bit lower than 8,500. I think that if we actually breach through that, then we should see an extension higher, perhaps even to retest the highs that we had back at the beginning of the summer in June. That's what I think about Bitcoin. Now, Ethereum doesn't look that good, but it also has a potential, let's say, somewhat constructive way to interpret it. And that is, we had this descending wedge, we broke above it, we came down, we retested it. So, we might see a move higher from here, but, you have to admittedly acknowledge that, Bitcoin looks much more constructive than Ethereum does at the moment. So, between the two of them, it looks more likely that if one is to make a decent move to the upside, that looks like it's going to be Bitcoin and not Ethereum. Have a look at Matic. BTC looks like a gold chart. Matic, what is Matic? Is that misspelling or something I'm unaware of? Oh, oh, it's some kind of a shitcoin. Okay, got it. Okay. Oh, yeah. Okay, the usual price action we used to have, in the older times with Bitcoin. It started from 0, it went to half a cent, down back to, like, let's say half a cent, and down to like 10 cents, and all those moves are happening within a couple of days. Yeah, okay.
They're like penny stocks.
Not even. Actually, penny
All
stocks
right.
look much better than that.
But you know what they do in pennies is, I know because I actually did IR for a while, Steve, is they actually go out and give people restricted and free trading stock as payment for them to create volume and bring in buyers so that the insiders can raise some cash.
Oh yeah.
I mean, that's a game.
Yeah, the usual pump and dump, which I
so
also
they're doing it in this stuff now.
Oh, absolutely. I think that Bitcoin is a clear example of pump and dump.
Well,
I mean,
especially these things, they're like the trash. Like, you call it duty, right?
No. I mean, it's more impressive in Bitcoin for the following reason. Bitcoin, theoretically speaking, is like the blue chip of
right. IBM. It's IBM
of cryptocurrency. So it's like the most reliable, the most acknowledged, the most liquid, etc. And look at this. You get a move within less than 2 days.
Yeah.
Look at this, 40% higher. Yeah. 40% higher in 2 days.
They call that reflexivity.
Yeah, and then what happens after a 40% higher in 2 days? They
sold.
They sold into it, and they took it lower, right? Yeah. So imagine how many of the hodlers, or those that still think they can make fast money out of that, got ecstatic by seeing the 20, 30, 35% move higher, and they were like, okay, this is it, the correction is done, I'm going all in. And then they were left holding the bag once again.
Well, Hendrix wrote a song, manic depression's a frustrating mess. is the key line. And yeah, I've never done the manic part of it, but anyway,
Have you actually ever seen a bipolar person?
I've known a few. Yeah.
Yeah, have you actually had the um, how
Pleasure.
can I say it? No, it's not a pleasure actually, but have you had the luxury of actually seeing both sides of
Yeah.
the pendulum? I mean, both
Yeah.
the
The guy,
depression and
yeah,
the
the guy was a
mania phase.
broker. Yeah. Guy
Yeah.
was a broker. He'd come in all pumped up, and then he'd come in later detached. And trading is not a real good avenue for people with that kind of
No,
predisposition,
absolutely not.
because you
Absolutely
could
not.
become that, being emotionally and psychologically happy after trading for a few years. You might need a sanitarium.
Yeah, absolutely, absolutely.
I
And
mean, I
these
know
are all
pros that went to
these are all
hospitals
oh, absolutely.
because they were
I've
so devastated.
I have I have a story that actually it reminded me of a story, but it's not that very similar. I've told you before when you interviewed me years ago that I went into the FX trading business because my uncle was like probably the most famous Greek FX trader back in his days. So he was like, you have a talent for that, because I was trading as a university student. I was trading actually football bets. So this guy was like in top positions, all over the world trading FX back in the day when they were actually giving orders via phone only.
Right. I remember.
Um,
I did that.
so he was working like so many hours that at some point he had a meeting and he was sleeping at
Yes.
his office, etc. At some point he had a meeting with a client and he started seeing everything in purple.
Oh, wow.
Yeah.
Yeah.
So
Okay. Yeah.
yeah, or for
Well,
example,
I do sing Purple Rain.
yeah, or for example,
I
he was going back home to have a shower, and his daughter was opening the door, and he was like, "Who are you, sir?" You know.
Oh, he had a break. He had a psychic break. Yeah. All right. All right. Well, anyway, we're not going to let that happen to you guys, because you're going to trade with the lowest leverage. So the worst thing that happens is you're going through a gradual drawdown during rough periods. Really, use less leverage. And one of your favorite guests is here today, Steve, Dan Popescu.
Okay,
And Dan is I'm really interested to hear what he's thinking in the precious metal arena and other instruments as well. So I'm ready
perfect,
to bring him on.
perfect. Let's go ahead.
Okay. Hi, Dan. Welcome back to Face. I always learn from you. Okay. Okay, because you switched that. Okay. And I'm now unmuting you, Dan.
You're muting me. Okay.
How are you, bro? How are you, Dan?
I'm fine. You?
Good, good. So you moved to France, right? You moved to France, and the whole country shuts down.
Yes. Yes. I moved back to Europe, and I commute very much in 3 countries which I went to school, and
Yeah.
I
Nice.
was born. Romania, Italy, and France and Monaco are the
Oh.
area usually where I spent my childhood and adolescent years. So I am back, but I'm also coming back to Canada very often for clients.
Okay. Well, you're speaking to someone who's half Romanian. So, Dan, if you want to share your screen, I'm not sure if we were using Zoom the last time you were here, but there's a green box that says share.
Let me see. Can you see now?
Not yet. See the green box? You click share, and then it'll show a screen.
Okay, I'll click share. Yeah. Okay.
Yeah.
And then you have to choose the screen you want to share, or the window you want to share.
Okay, desktop. To share. Okay.
Click it.
Will not be able to record. Okay, later.
Yeah, don't worry about the recording. It's just that green share box, and then your
Yeah.
screens will come up, and then you just choose the one you want to show.
Okay, so should be.
We got
yeah,
it.
there you go. We got
All
it.
right. Okay.
Can you see my chart right
Yeah,
now?
we're looking at gold currency index versus gold.
Yeah, I
Currency.
always like to start in the morning when I get up. I usually look at this chart. It gives me a long-term view. I've been taught in the late 60s and early 70s to always start with the long picture, and then if I do trading, I go down to the 1 day, but always never miss the big picture that can bring you a hurricane or a tsunami.
Okay.
So
So tell us what the blue represents and the gold or yellow represents.
okay, so the yellow represents the gold price in US dollars.
Okay.
Okay, so that's what you're usually familiar. So you can
Right.
see over here that it has recently broken in 2019. It has broken that long-term consolidation
Yeah.
that started in 2013. That's when the bear market ended, and it broke up. But normal markets, if they are not excessively manipulated, they never go up on a straight line. They always have what we call it's like a mountain climber. If you
Right.
want
There's
to
always
get
a plateau where you consolidate
exactly,
gains before you climb up to the next
exactly,
level. Okay.
yeah. So what it shows is that gold definitely broke out of that consolidation. That is also a signal for that destroys one of the scenarios that I kept in mind, but I did not believe. I gave low probability, and that when the bear market started in 2012, it was a possibility that it retraces all the bull market that started in 2000 down to about 2000, less than I think about 450. It started at 250. That was the low
Right.
of the dollar in '99.
Right.
Okay?
Right.
So a full cycle of a bull market would mean that it goes. It went to 1900. That it will go down and cancel the whole bull market and go down to about 250, 300.
Right.
That was one scenario. The other scenario is that it's just a pause, a temporary pause in a much bigger and major bull market, historical secular bull market. That was the scenario that I preferred based on other fundamental issues like global debt. So, and there was another issue that I want to mention here is that I don't have that chart here to give it to you, but in 2012,
Yeah.
it comes after the 2008 financial crisis.
Yes.
Okay, which when the crisis started, gold started jumping up very fast, and it went from about 1,000 to doubled in price almost to 1,900.
Yeah.
Okay. Now, what happened at that point is that you had a panic in the banking central bank system, and all the central banks at that time got together and coordinated a move to save the US dollar monetary system, which was everybody is admitting, everybody is saying it was at the point of collapse. One of the greatest fund managers in the United States, his name escapes me, said that that night he called his wife and told her to go to an ATM machine and take as much cash possible out of the ATM machine, because he didn't think the next day it will open.
Yeah, who was that? Jim Rickards?
No, no.
Because he wrote
it's,
about that the ATMs would
but
run dry.
he was the fund manager of Harvard University, I think.
Okay.
He's famous. He's of Egyptian origin. He has a
okay.
Egyptian name.
Okay.
He's very well known in United States. So
Okay.
it
Mohammed
was
El Arian.
exactly. I'm
Yeah,
getting old.
Yeah. Normally it would have taken me an hour to remember it. I have like a delayed memory fuse now, Dan.
Yeah.
So
He
yes.
he called his wife the night before and said, "Go and get as much cash out of the ATM machines because I don't think tomorrow banks will open." It was so bad. The situation was so bad. But at that time, contrary to today, I'll come back later. United States, the Fed was in coordination with the Bank for International Settlements in Basel, BIS, and with all the central banks, they got together to save the system, and they started pumping money into the system. What they did at that time, with the coordination of the IMF, is that they created SDRs. They printed, as they usually do, out of thin air. They printed SDRs. But not only that, what they did in 2000 and 2011, they decided to sell gold from the official gold reserves of the IMF. The IMF is one of the largest holders of gold reserves. It has more than very close to a little bit over 2,000 tons. And they decided at that moment to approve a sale of about 400, if my memory is correct. I'm not so sure the exact number. And they decided to sell it. So look where the bear market in gold happened. Now there is a top formation over here between 2011 and 2012. That is the time when the IMF transferred the gold to the BIS in Basel. BIS in Basel is the central bank of central banks. It's
Bank of International Settlements.
Yes, they do the buying and selling of gold for central banks.
They're the broker.
Exactly. So during that year where you see a topping formation in the price of gold, they transferred the gold from the IMF to BIS, and BIS started selling the gold. Now look, during the period of their sale, look what happened to the price of gold. It dropped up to, until 2014, it dropped to about 1,200. 1,080 was the low, which was much later.
Yeah.
But they stopped their sales around 1,200. Okay, which signals the end of the bear market. So despite what central banks and what the IMF is saying, that the sale was planned and arranged in such a way so it will not affect the gold market, you have to be lunatic not to see that it did affect, at least it had the moral suasion on the gold market, and it ended the gold market, bull market over here, which I expected to be just a pause before breaking above 2,000 and forced the gold market down. That's where the BIS stopped selling gold. Coincidence?
Did they announce that they were done selling?
They announced that they finished all the gold stock that they've received from the IMF, that it was sold. It was sold. India Central Bank was one of the buyers, and other central banks also bought that quantity of gold. Eric Sprott wanted to buy part of it, and he was turned down. Okay. So as you can see, that bear market, I would be stupefied if it's just pure coincidence, and an accidental correlation. It just doesn't make sense. It had the effect, and the printing of money, the cutting of interest rates, which was coordinated by all the central banks at that time, pushed gold down, but they stopped it, and momentum completely crashed at that time. It did not continue by itself lower, as some anti-gold were expecting. They were expecting gold price to go under 1,000.
Yeah, a
and
lot
go
of
close
targets
to,
at 700-800. Could that happen again, Dan, if they, say we get to 1580, 1600 this spring and the dollar's under pressure, could the IMF decide to do it again? And one other point with your chart here, there is a divergence where it didn't have the same impact on global currencies, what the IMF did, that it had in the dollar. And looks like global currencies are about or making new highs. The gold is making new highs against global currencies, although far away from in the gold. What's that tell you?
Yes, let me show you the chart, the same chart. This chart shows the index of the top 20 countries ranked by GDP, including the US dollar.
Okay.
Okay. So
Right.
it shows here that gold in a base of all the fiat currencies never really went into a bear market. It
Right.
really went just, as you can see, it almost stayed close to the top, contrary to in US dollars. Okay.
Right. Yeah.
Now let me show you the same chart, but unadjusted for GDP. Okay.
Okay.
So here you have 20 years of the same chart. Okay, this one.
Yeah.
But unadjusted for GDP, and there you can see it broke.
It's making new highs.
Makes new high. It has made new highs in all currencies except the US dollar. The lagging currency has been the US dollar, which has not yet, it has to cross somewhere above 1800 to go into new highs.
Right.
Okay.
So
now
yeah, this is a precursor.
Yeah.
What all the global currencies are doing minus the dollar, that eventually the dollar could catch up. Gold price could catch up to what's happening globally.
Exactly. It's not the global currency who will catch up to the dollar. It's the dollar that will catch up to the global currencies. Now you ask me the question: can central banks do that again? What they did in 2000 and after 2008? Yes, they can do the same thing again, but it requires a coordination between all the central banks, as it happened in 2008 to 2011. I don't see that situation today. Irrespective, I'm not here picking on Trump. I'm not picking on United States. I'm just observing reality. That I like it or that I don't like it, it doesn't matter. When I see a murder happen in the middle of the street, I don't care that I like it or not. I report it as it happens. Many Trump supporters, when they see something negative happening, because they love Trump, they pretend it doesn't exist. They call it fake news. They call it all kinds, but they refuse to admit reality. It happens to supporters of Trump. It happens to supporters of other political parties. Okay?
Yes.
It's the state of denial. Okay? I don't care, and my sentiments towards Obama against Trump, against Macron, that I like them or not, it's irrelevant. My question is it possible to have a coordination between the central banks today under Trump as it happened during Clinton, Bush, Obama? Facts indicate that Trump hates any kind of international coordination, globalization. He hates the world. He hates working together in any environment. And we have the best example, the most recent one in London at NATO meeting. It was even Johnson, which is you could say UK, it's a US
Trump.
ally,
He's
turned
the Trump
against
of the UK.
yeah, turned against Trump, refused to come to a press conference in public to be seen in public with Trump, bashed Trump behind his back. So I don't see today a possibility of us sitting together between the United States and all the central banks, all the governments, to coordinate in case of a crisis like in 2008 and try to pump money into the system again and do a coordinated sale of gold reserves from United States Treasury. I'm not going to go into the details between
it's every man for himself now, Dan. That's your point?
Exactly.
Every nation for itself. That's what nationalism is.
Exactly.
I'd like to ask you. Okay, go ahead, Dan.
It means that we're going to have a crash, a crisis, in which gold will shine. It is in these kinds of circumstances that gold shines.
Okay. All right. I want to ask you what your view is, and if you can read anything into Christine Lagarde coming in as a new ECB central bank chairman, with her experience of restructuring debt of countries. You read anything into Lagarde's history and her new role and the implications of it?
Yeah, I don't see very much change with Christine Lagarde. Certainly, each individual has its own personality and brings its own character into a position. But in general, most of the central banks follow the international mood of the time.
Isn't she the first one, though, that comes from the IMF to become a central banker? And so wasn't she there when the scheme to coordinate a top in the gold market, Christine Lagarde was part of it?
Yes.
Okay.
And that brings her an excellent experience of the situation in 2008. But she will have to deal with a different environment where Donald Trump doesn't want to collaborate. Right. Donald Trump doesn't like the IMF. Donald Trump doesn't like any kind of coordinated global action. Okay, so the fact that she was there in 2008, she dealt with a situation that existing with facts at that time. Those facts don't exist anymore. Okay, so she has to deal with a different environment. Okay, but she has, like her or not, she has a very good experience. It's a person who knows everybody already. She doesn't have to learn the job. That doesn't mean she's going to be good, but it shows purely if you base, Dale, I don't know if you have hired people in your life. The first thing that you do when you hire people, you look at their CV, you look at their past. It might not be, the person might not be as good as that person was in a previous job, but that's your starting point.
Right.
So I think on that basis, I say that Christine Lagarde is highly qualified, highly experienced, but she has a bias of printing money. Okay. So I expect her to push for printing more money.
Unlike the Fed chairman we lost yesterday, Paul Volcker, who they called the liquidator.
Exactly. But keep in mind that even though Trump and the Fed are not necessarily pro-printing money, they have, Powell has indicated that he will do anything to keep the stock market up. And Donald Trump is I love debt to infinity. I
Oh, yeah.
love going bankrupt. I
Yeah.
love debt.
He's the king of
Okay.
debt.
Exactly.
Let me ask you with debt, and I want to wrap it because I've been asking people about this and what their views are. Dan, what's happening in the Fed funds market, overnight repo market? What's your view on that? Is that a canary in the coal mine? At first, we were given excuses where there was just pressure for funds because there were tax payments due, and the Fed has pumped billions and billions into it to stabilize it. You have a view on what's happening in short-term money markets?
Well, Dale, what happened in the financial industry is that there has been a lot of parallel institutions, derivatives, the offshore dollar market that started in the 1970s.
Oh, euro dollars. Yeah.
Exactly. And that is money that is very difficult for the BIS, for the Fed. It makes their data today completely obsolete. So they are completely blind in their actions. They don't know what's happening in the market because there are so many offshore institutions, offshore dollars that can crash the market, and they cannot see it in their indicators, in their data. So the derivative market—
They're off balance sheet stuff you're talking about?
Exactly. And
Okay.
it is not, it doesn't appear clearly. It's like an iceberg. The gold market is the same thing. For an analyst like me, what makes analyzing gold very hard is that the information, the data that I have access to is just the above water piece of ice of the iceberg. 90% of the gold market is underground. I cannot see it.
Okay.
Okay.
All right.
So it's the same thing now with all those dollars, yuan, euros, which are out of the control of the central banks. The central banks, their instruments cannot trigger, control, accelerate, decrease in velocity of those dollars. They've lost control of it.
Okay.
Okay.
All right. So you have another chart you wanted to show to wrap it up?
I wanted to bring you this chart up. It's the transparent gold holdings. What we talk about when they say transparent gold holdings, it's what I meant today. This chart only shows the gold that it's visible in private hands, and that is ETF funds from all over the world.
Okay.
So Nick Lurd from Australia has created a composite of all the ETFs holdings around the world. And I want to show this is a chart since the beginning of the bull market in gold in 2000.
Right.
So you can see it's gone up until 2012. It crashed when the central banks crushed gold with the sales of the IMF. It's been coming up, and look at what happens is that now it's coming very close to the high of 2012, getting ready to break up. That means that there's an incredible accumulation of gold by private individuals worldwide. But if I look at the American picture, I would not be surprised to see that it hasn't happened anything. Okay?
Okay.
So it's mostly the world population, Asia, Europe, which is now buying physical gold and stores it in ETF or physically. The last thing that I want to mention to you, what makes me bullish and what makes me think that will break very, very soon above 2000 is that continuation, and that has been my thesis for gold 5,000, not 10,000, but gold 5,000. And that is central bank attitude towards gold has changed.
Yeah.
And in the last 6 months to a year, central banks have been buying gold like crazy, and they have been talking positively about gold as the etalon of the international monetary system. So I wouldn't be surprised to see the Europeans with the Chinese, the Indians, and the Chinese and the Russian creating kind of a crypto international currency, not the SDR, because the SDR is under the veto control of United States, but some kind of an international cryptocurrency backed by gold outside of the control of United States in case there is a crisis. I see coordination going on right now for an international payment system, a coordination between European Union,
Yeah.
China, Russia, and also
Yeah, they're tired of being threatened, being unable to use SWIFT if,
Exactly.
you know, at the whim of the U.S.
Exactly. This is something that I'm watching very carefully. It is done beyond closed doors for the moment, but there is an excuse that Europeans are using. It's Iran, but they are not doing it just to help Iran. They don't give a damn about Iran. The new payment system that Europe has created, it has a much bigger objective than Iran. It has the objective of creating an ex-US dollar payment system out of the control of United States. And it has at each one of the meetings to create this system, the Russian and the Chinese were part of the conversations, part of the coordination, part of the planning.
Okay, I just got a great question from one of our attendees, FX Cole. Who is selling gold to the central banks? That all the gold they're buying, who's the seller?
Most of the selling is done by other central banks. Not all of them are buying. There are some that are selling, and there is mining. China buys all the mining production of China. They don't report. They don't give any information. They are buying all the gold that is mined in China, and China is one of the 3 largest gold producers today.
Who are the other two?
Russia is also buying all the gold, not all of it, but it's very come. I'm waiting for the data for 2019, but it's coming very close to approaching 90 to 100% of the gold production of Russia, which is also a very large gold producer in the world. Okay. So the largest buyers of gold, which is Russia and China, are mostly buying their
own gold. Okay.
Exactly. And keep in mind, when they buy their own gold,
they have nationalized. I mean, everything's nationalized in China, so it is their gold. Yeah. Okay.
So most of the gold that they are buying, and they are the largest gold buyers, it's from them. Kazakhstan, Mongolia, Uzbekistan, the same thing. They are buying their own gold production. Okay. So the majority of the gold that central banks from what's called developing countries like Russia, China, Kazakhstan, Uzbekistan, Mongolia, they are buying their gold mine production internally. But there is also some Western Czechia is selling, but they're selling very little gold. They sell about 1 ton. They only have 8 tons right now. Okay, that's very Czechia.
Chechnya?
No, the Republic of Czech Republic.
Oh, the Czechoslovakians. Okay, all right.
Yeah, not the Czechoslovakian.
Oh, yeah, it's not. Right. They're divided now.
Yeah.
All right.
Yeah. So to the question of your auditor, most of the gold that major buyers today, which are Russia, China, they are buying their own gold mine production in large proportion.
That's a pearl to know, and a great question. And Dan, another great interview, and I wish you and your family blessed holidays and a great new year in 2020. And thank you so much for coming in every now and then and sharing your views and edifying me and everyone who listens to you.
Thank you very much, Dale. It's a pleasure, and I wish to your auditors, to you, and to everybody happy holidays and a happy new year. Let's hope that that I'm wrong and things will not be as bad.
Okay, don't wait to buy gold. Buy gold and wait.
Yes.
All right, Dan. Thank you so much, my friend. And that's a wrap for us, everyone, on Turnaround Tuesday. Remember, don't just count your pips or coins or bars or however you form or ETFs. Count your blessings. We'll see everyone tomorrow. Thank you, Brock. Adios, everyone. Good hunting the rest of the day. Thanks again, Dan.
Pleasure, Dale. Bye.
Bye-bye.